Okay, imagine a country that's been stuck in economic limbo for 30 years, deflation, stagnant wages, and a central bank practically begging companies to raise prices. Now imagine that same country suddenly flirting with a rate hike. Sounds absurd? Welcome to Japan's surreal economic tightrope walk. Here's why the BoJ's potential move isn't just about inflation, it's about identity. Let's start with the obvious. Oil prices are spiking again. But here's the twist, Japan's vulnerability isn't just about fuel costs. The Strait of Hormuz tensions aren't new, but in 2024, they're a psychological catalyst. Why? Because after decades of deflationary complacency, any external shock hits harder. Personally, I think markets are underestimating how destabilizing even a temporary energy spike could be for Tokyo's fragile recovery narrative. Now, the BoJ's obsession with core CPI. On the surface, it's logical, target the metric that strips out volatile items like food and energy. But here's what analysts miss, this isn't about numbers. It's about reprogramming corporate DNA. Japanese companies have been conditioned to avoid price hikes since the 90s. The BoJ isn't just fighting inflation, it's fighting institutional muscle memory. A detail I find fascinating. Their latest report frames wage growth not as an economic indicator, but as a behavioral experiment. Will businesses finally stop apologizing for profitability? The rumored September-October rate hike timeline feels politically calculated. Why? Because Shinzo Abe's old adage still rings true, when the BoJ moves, it moves with consensus. But here's the contradiction. Raising rates risks crushing Japan's record debt-to-GDP ratio. What many people don't realize is that this isn't a binary decision. It's a high-stakes game of chicken between the BoJ and Tokyo. If the government doesn't tighten fiscal policy preemptively, who exactly bails out the banks when the JPY tanks? And let's address the USD elephant in the room. A hawkish BoJ could strengthen the yen, but only if the Fed's own tightening cycle doesn't drown it out. From my perspective, the real story is the yen's identity crisis. Is it still a safe haven, or has Japan's demographic time bomb rendered it a perpetual underdog? The answer determines whether this rate hike talk becomes reality, or fades into the same old deflationary haze. So here's my closing thought. What if the BoJ's greatest challenge isn't inflation or rates, but convincing a generation of executives that growth isn't a dirty word? The mechanics of monetary policy feel almost secondary to the cultural shift they're demanding. What do you think? Can Japan's corporate sector unlearn 3 decades of trauma? Or are we watching a tragicomedy where the patient refuses to wake up?